Welcome to the Transparent FX Academy. I'm Nick and I'm a top plotter in TradingView with over 190k reputation points. And in this video, we will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be analyzing the pair from a technical perspective, then we will go and see what we have when it comes to the order flow, so the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. So without wasting any more time, let's jump straight to the charts. In today's video, I want to speak about GBPUSD. Now, why do I want to speak about it? Because at the moment, we do have quite interesting price action and structure. Now, starting here from the monthly time frame, what we can see now here in the monthly, clearly, at the moment, we are testing very strong support and demand. In fact, from here, the market started all this move to the upside. Again, here, the market tested its zone and rejected it to the upside. Again, here, the market tested the level and rejected it. And at the moment, we're testing this exact same level of support and demand from which we could expect a potential rejection higher. Dropping down on the weekly, what do we see? Now here on the weekly, the market definitely seems overextended to the downside and in need of a correction. In fact, we know that the market never moves in a straight line. In any specific move of the market, we will have impulses and corrections. And since we just got a very strong impulse to the downside, we could expect a potential rejection and correction. Now, if we want to measure this potential rejection, we must take our Fibonacci's from the high to the low of the impulse. And if we do that, we can notice how we have a 0.32 Fibonacci retracement lining up exactly at this area that we do expect the market to provide a correction to, which would be our first upside target. Going down on the daily, what do we see? Now here on the daily time frame, we can see a different scenario. In fact, we can notice how in creating this move to the downside, the market has now also printed this M pattern, specifically an overextended M pattern. And what we know is that after the creation of an overextended M pattern, we would like to see the market create a move to the upside to go and complete the pattern at the previous support turned resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data on the pound, what we can see is that on the pound, lately net positions have been decreasing. We clearly went from 2.2k to minus 73k net positions. We have definitely more shorts than longs, and that is clearly reflected in the price action with the market melting to the downside because of the bearish positioning of the big players in the market. However, we can notice how with the last report, we now started to see shorts getting closed instead of added. We have many reports in a row in which we had thousands of shorts getting added. Now is the first report that we start to see shorts getting closed, meaning that a potential short-term correction back to the upside for the completion of this M pattern at the neckline is definitely a possibility. So how we could be approaching this potential a short-term longing opportunity and in general completion of this M pattern. As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, we could be looking for this potential move to the upside and completion at the neckline. Now, if you don't know what I'm speaking about when I say market environment shift and valid entries, that is all part of the mentorship program, which you can access now completely for free. The link, in fact, is in the description, and I really suggest that you go and check it out. Now, if you enjoyed this video, make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you, because obviously it helps with the YouTube algorithm, and I will see you in my next video.